Welcome to Resilience and Resolve with Lance Drury.
Hello and welcome to Resilience and Resolve with Lance Drury, where we break down the complexities of the tax world, making it easier for you to navigate through the numbers and paperwork. I am your host, Kevin Rosenquist, and in today's episode, we are diving into a topic of dealing with the IRS, some strategies for how you can do that. So Lance, good to see you. Welcome back.
Good to see you again, Kevin. Glad to be back.
All right, people's favorite thing in the world to do, deal with the IRS. We're going to talk about how people can maybe have better strategies to do this. So let's start here. What are some of the most common mistakes that you see individuals and businesses make when they're trying to deal with the IRS?
Well, the first one is they try to do it on their own. They think it's easy, that it's not complicated, that they can do it on their own. And invariably what happens is if they're individuals, they'll call them up and they just make them pay every last dime back. Then they call me and the first words out of their mouth are, I can't afford the payment. And then I go, well, why did you agree to do that? And they say, well, the IRS told me this is what I had to do, which is not correct. It's all based on their ability to pay it back. The other big problem and mistake that I see from self-employed people is they think they can do it on their own. So they call the IRS, they set up a payment plan, but then there's no money left over to make the current year's tax payments, to make estimated tax payments. And so the liability just, pyramids. They make the payment on the back taxes, but they can't make their estimated. So they continue to incur additional liability. So it doesn't really, it's sort of counterintuitive, but the way you have to handle back taxes for a business is you have to make sure you're making your estimated tax payments. And then you call the IRS and get an agreement on the back taxes, and you'll get a better deal. Because if you're paying $1,000 a month in current taxes, that's $1,000 less a month you're going to have to pay on the back taxes.
What is the typical, do people just, how do they get so deep, I guess? Does it just, they just don't pay for too long and then it piles up?
Well, the problem is 70% or more of my clients are self-employed. Those are the people that get in trouble because the taxes aren't automatically taken out.
Right. I'm self-employed, so is my wife. So,
and so part of it is it's two things. Number one, somebody goes belly up on them. They don't have enough money to pay all the bills, so they pay their suppliers, they pay their employees. They think they'll catch up in the next quarter or whatever with Uncle Sam, and then it just kind of snowballs. Mm-hmm. The other thing is most of them are very good at what they do, whatever that is, construction or real estate or whatever, but nobody taught them how to run a business. Mm-hmm. So there's a lot more paperwork involved in running a business than anybody would have you believe. And the other thing is they work late, they get home, and the last thing they want to do at 7, 8 o'clock at night is paperwork. Mm-hmm. So, yeah, everybody says, being your own boss is the American dream. Well, I guess that's true as long as you know how to run the business. And so that's where a lot of people fall short because it can be daunting at times. I get that.
Do you recommend businesses do quarterly taxes, even if they're small?
I recommend them to do it at least on a monthly basis.
Oh, wow.
Because here's the classical case. Realtors have 4 times the national average of tax problems. I just had a woman give me her card a couple of days ago when I was out having dinner, and she said, I'll be calling you. And I gave her the piece of advice I always give realtors. They get a big commission in the first month of the quarter, nothing in the second or third month of the quarter. So by the time the taxes due, they've spent all the money. Mm-hmm. So when they get that commission, there's nothing magical about paying at the end of the quarter. Uncle Sam will take your money anytime. You write a check for 20 to 25% of your commission, send it to Uncle Sam. If you have hired my firm to do this, we will do that for you, because if you don't notate that check properly, they're going to apply it to the back taxes, which defeats the whole purpose in doing that.
So a lot of people obviously are going to panic when they get that IRS notice. What should they do first as soon as they see that?
Well, they should call a tax professional, because I have to tell you, those notices are so confusing, so complicated, and they're misleading. They act like they can levy against you when they can't because they don't give you your appeal rights, but they're trying to get people to pay their taxes. So they are somewhat misleading because of that. But a lot of people are just confused by the notices. And it happens a lot. I'll have a a consultation, and I'll tell them we got to reschedule because I want to see the notices. I don't want to take their word for what it is. I want to see it myself because we look at them every single day. And like I said, they're confusing to the average individual. So you really do need to have a tax professional look that over.
Yeah, that makes sense because you can decipher it. You can decode it.
Right.
When negotiating with the IRS over unpaid taxes, what are some of the strategies that someone like you uses to help your client?
Well, every case is custom built for that particular client because everybody's ability to pay the taxes back is different because everybody's income and household expenses are different. So every particular case is custom made to that client. But, if they don't have a lot of money, currently non-collectible could be a good option whereby they don't pay a dime back. But, you got to run out the clock, and that could be several years down the road. You could do an offer in compromise, except what we're finding is that in our Nashville office area, maybe 2% of our clients qualify for an offer in compromise because the IRS looks at your net equity and assets, and you've got people from California moving to Nashville and paying $200,000 more than the listed price for a home. So that elevates the fair market value of everybody's home. So everybody's got all kinds of equity in their homes.
For those who owe back taxes, what are the best options for resolving that debt without getting themselves into a really bad financial situation?
Well, again, it's all based on your ability to pay it back. So as long as you're not eating out all the time or drinking it away or gambling it away, you'll be able to come up with a reasonable payment plan. But it takes a lot of work because we have to prove to the IRS that the taxpayer doesn't have the ability to pay it all back. It's also a lot of work for the taxpayer because we have to comb through not only financial statements, which are confusing to the average individual, but we'll have to go through bank statements, credit card statements, debit card statements, cash receipts, because for certain categories of expenses, we're going to have documentation for the IRS. They're not going to take my word for it. They're not going to take my client's word for it. So it's a lot of work to go through all those financial statements and the accompanying documents.
Yeah, I'll bet that's a lot to go through for sure. Can you talk a little bit about the IRS Fresh Start Program? Like, what is it and how does it work?
Well, it's basically just a term of art. Several years ago, they came up and the multiplier for an offer in compromise was lowered so that more people could get an offer in compromise. But it still basically comes down to everybody's ability to pay it back. I can't just call them up and say, hey, Joe Blow's a nice guy, give him a fresh start. I wish it was that easy. I wouldn't have to work every Saturday and Sunday morning. But it's not. It's really that it's always been this way. You have to prove they don't have the ability to pay it back. That's how you get a deal for your clients.
So you really have to kind of be in I don't want to say a bad financial situation, but you have to be legitimately unable to make reasonable payments.
That's correct. Now, we do have a guy in Nashville. He paid me a lot of money. When we got his financial statements, I thought, oh, my God, he's going to have to pay it all back because he makes $500,000 a year. Well, in September, well over 100,000 fell off the books. He owed $500,000, and now we're just running out the clock on the rest of it. It's going to take a little while, but, even if the IRS in a few months started levying the next day, for them to get $500,000 in a year or so is not going to. They're not going to be able to do that.
Okay. What kind of power does the IRS have as far as, levying bank accounts, garnishing wages, seizing assets, that kind of stuff?
Oh, they have all kinds of power, and they do it all the time. July of last year was a record revenue and profit for the firm. And that's highly unusual because it's all psychological, but people think the IRS is going to come after them more during tax season. So we do well January through May. Well, it was and normally people ignore their tax problems in the summer. They want to go out, have fun, go on vacation, whatever.
Kick that can down the road.
Right. Kicking the can down the road. And the thing was, the IRS was levying people left and right, or threatening to levy people. And that's when people call us. So July and even August was like the third best month we've ever had. It was just unbelievable. And they're still doing that. We're still getting a lot of LT11 letters, which is the final notice of intent to levy. If they go more than 30 days from the date of that notice, The IRS has the power to clean out their bank account, take 90% of their take home, and to seize assets. So people don't generally ignore it after that, but sometimes they do. Sometimes they just, I had a guy who just put it in the drawer, didn't pay any attention to it, and he got levied, and that's when he hired me.
Yeah. So you're still seeing all of this, even with the, a lot of people, a lot of federal workers and IRS workers being let go.
Yes, it's
Interesting.
It's still, although I think it's been a little slower this year during tax season, and I think that maybe that's because people think that Donald Trump is going to abolish the IRS. That's not going to happen. He's going to cut back on all the monies that Joe Biden and Congress pushed through. That 87 billion or 80 billion and 87,000 new workers. So most of that will go by the wayside, but they are not going to abolish the IRS. So I think I have a job security for a pretty while yet, because right now there's 26 million delinquent taxpayers, and they estimate by the year 2032, there's going to be 35 million delinquent taxpayers.
Wow.
So hopefully I'll still be working in the year 2032.
I hope you're retired, Lance. I really do.
I'm too young to retire. I'm only going to be 72 in September.
Jesus. Work.
I'd lose my purpose in life. I got to keep going. I mean, it gives me a reason to get out of bed in the morning. I'm afraid I'd get lazy and probably be dead in 6 months if I didn't get out of bed and go to work and help people out. I'd feel like a deadbeat.
So, dealing with the IRS, you said that people will try to do it on their own. It won't work. And then they end up calling you. So if they agree to a payment plan with the IRS, is it too late to call you and get it worked out? Or is there still options?
Oh, no, we can still help them, because you can always renegotiate those agreements based upon your financial situation. And sometimes the IRS will want to review it when they see if you filed your tax return and now you're making more money. Then they will sometimes say, hey, you got to send us more financials. We need to say if you should still be in currently non-collectible, or if you have the ability now to pay us more money. So that happens from time to time as well.
Yeah. So if someone gets one of these, an IRS letter, they start to realize that they're in some trouble, and they call you and they want to sit down and talk to you. What should they have prepared before they talk to you to make things run as smoothly as possible?
Well, the main thing is to get us any notices that they've received from the IRS. Now, we only do a free half-hour consultation. I still have 3 more to do today, and that's not enough time to go through their complete financial situation. We got to spend 5 hours, 10 hours going through all that because, very seldom do we go through it once, because we got to make sure the numbers are accurate, because they're submitting them under penalties of perjury. And secondly, guess what? They give us bad numbers, we're going to give them bad advice. So we got to make sure that we get the numbers accurate before we call the IRS to negotiate.
Okay. Yeah, that makes sense. And they keep sending notices. How much worse does it get the more notices you get, as far as your ability to help them? The longer they wait, does it get harder?
Well, the penalties and interest are going to accrue more.
Yeah.
It doesn't necessarily get harder unless they have let it go and neglected it so long that they now have a levy. Because part of the problem at that point is, if they've wiped out their bank account or taken 90% of their take home, how are they going to pay me or anybody else to get their problem resolved? So that's the one thing where you don't want to go too long in that case, is if you get levied. The other thing is if there's a revenue officer. This happens all the time. People think they can do it on their own. They get what's called a summary of taxpayer contact, which is basically a laundry list of financial items that the revenue officer wants. And then they end up getting levied. And they come to me and they go, oh, I sent in everything they requested, but they didn't. Because again, this is all so confusing and complicated to the average individual that, they're going to miss something. That happens all the time. And so if you get a revenue officer involved, most of the time they're not the nicest people to deal with. There are some good ones, but there's a lot of nasty ones out there, and they won't call you up and say, oh, you forgot this or forgot that. They'll just go out and levy you.
Oh, really? They won't kind of help you through it?
No. Well, if you call them, they might, But no, they're not there to help you through it. They'll send it. They'll put down at the bottom that one of the consequences of not giving me all this information by X date is a levy.
Mm-hmm. Yeah. So even more important to work with someone like you.
Yes.
Yep.
Absolutely.
All right. Well, great advice as always, Lance. Thank you for joining us on Resilience and Resolve with Lance Drury. To connect with Lance, visit lancedrurylaw.com. And don't forget to like and subscribe to our channel for more great advice on taxes and dealing with the IRS. Lance, always great chatting with you. Thanks so much for your time.
Thanks, Kevin. Good to see you again.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.